Tony Watson here with Robert Hall & Associates. Today we're going to talk about the in-home office deduction. Now remember that when you file this in-home office form with your individual tax return, what you're telling the federal government is that you have a room inside of your house or a space inside of your home that is solely dedicated to business. I always tell my clients that that 10 by 10 room that also has a pull-out couch bed where your guests normally stay, or a baby crib or an elliptical machine, that room is not 100% for business at that point because you have other personal items within the room. So make sure that if you are taking that in-home office deduction that this is a room that is solely dedicated to business. This particular form on an individual tax return runs about a 75% chance for audit just by filing the in-home office deduction form. It is one of the highest audited forms on an individual tax return. I'm not trying to scare you into not taking the write-off, because if it is an ordinary, necessary, and legitimate and above and beyond reasonable deduction, do not be afraid to take it as a write-off. The federal government will allow it, and the IRC, the Internal Revenue Code, says that you can have an office inside of your house. But make sure that you're being reasonable with the amount of square feet that you're using within your home as far as the in-home office percentage is concerned. Remember that if you live in a 1,000 square foot home and you're saying that 50% of your home is your in-home office, that's an ordinary, necessary, and legitimate write-off, but above and beyond, it's not a reasonable percentage of your house to use. So if you have particular questions in regards to the in-home office deduction, pick up the phone and give Robert Hall & Associates a call, or talk to your tax advisor as soon as possible, and thanks for stopping by.